Roshani Zafar, and I'm really pleased to welcome you to this session on the Saving Conundrum, What Are We Missing? We have a very distinguished group of panelists that have joined us today. I'll be introducing them soon. If we look at gender inclusion and if we look at economic participation of women, the World Economic Forum states that's going to take us 276 years to make up the gender gap. If you look at financial inclusion, the Women's World Banking website tells us it's going to take us 100 years to make up or more to make up the gap on financial inclusion. In fact, over the past few years and the past decade, the gender gap in financial inclusion has been increasing rather than going down. If we look at Pakistan today, overall, the bank sector in the formal sector is about 21%, the majority of whom are women. Women holding bank accounts in Pakistan are less than 2%. So the question we have to ask ourselves is what, from a macro to a micro perspective, what are the questions that stare us in the face when it comes to the savings conundrum? If you look at from the macro perspective, the GDP to savings rate is endemically tied to the growth prospects of the country. If you look at Pakistan and compare it to the rest of the region, the savings rate today in Pakistan as a percentage of the GDP is 13%. In India, it's 30%. In Bangladesh, it's 26%. So the question we need to ask ourselves, what is this contradiction? How come, as compared to other countries of the region, Pakistan is far behind when it comes to the savings rate? We have with us Dr. Hafiz Pasha. He is a distinguished economist and a retired civil servant who holds a PhD from Stanford University and brings a vast experience in analyzing macroeconomics and the development sector in particular. So we will be hearing from him. On the other side, we have the micro perspective. When we look at gender neutrality in financial inclusion, that has been the mantra that most financial companies, microfinance companies have been positing. It actually leads to gender bias. So that is one of the reasons why, unless or until you have gender intelligent design and use a gender lens to design products, because women's lived realities are very different from their male counterparts. And those barriers and those aspects need to be addressed when it comes to gender intelligent designs. We have with us Dr. Mariam, who is an associate professor at the Lahore University of Management Sciences, and has currently done extensive research on technology, women, and financial inclusion. So we will be hearing from her and her experiences. On the other side, of course, is the regulator. What laws, rules, regulations, processes can be put into place to create financial inclusion and to reduce the barriers that women face, whether it's access, whether it's affordability, whether it is identities or digital identities. All of those aspects impact on women's ability to access formal financial services. So we have with us Madam Khalda Habib, who is an executive director from the SECP, and she will be talking about the experience of the regulator and the vision of the regulator in trying to enhance women's financial inclusion in Pakistan. So we will start our panel by first talking to Dr. Pasha about the macroeconomic aspects of the savings rate and its link to gender. As I was sharing in the beginning, Pakistan, compared to the rest of its region, is far behind on the savings rate in terms of the GDP to savings rate ratio. It continues to be lagging in many ways. So my first question to you is actually it's a dual question. One is, what is the importance of savings and why are we facing such a contradictory low level of savings in Pakistan? What are the reasons for that? And you also did this Human Security Index report for Pakistan, which talks about gender equity and geography and how that's impacting on human development in Pakistan generally. So what's the link between these two? How can the savings rate and especially women's inclusion in this space help to reduce gender inequities? So over to you, Dr. Pasha.
Bismillahirrahmanirrahim. Thank you for your questions. Let me initially state that today Pakistan is facing probably the lowest savings rate in its entire history. And I'm talking now about the two components of savings. One is what we call domestic savings, and the other are the savings which come to Pakistan via remittances. As it turns out, Pakistan's savings rate, overall national savings rate, you have rightly referred to as 13% of the GDP. But out of that 13%, the one which we are really focusing on and discussing is the domestic savings rate, and that, I'm afraid, has collapsed to hardly 3%. 3% of the GDP is the national savings rate by households within the country. I mean, imagine about 25 years ago, the domestic savings rate in our country was almost 15%.
Right.
So this is what has happened. Pakistan, in a lot of indicators today, has the worst numbers in its history. Now, as a result of this tremendous, unfortunate decline in the domestic savings rate, and whatever the savings there is now is the is foreign savings, if we call them that, by our workers abroad. The end result is that the investment rate has also had to come down dramatically. And last year, we had the lowest investment rate in the history of Pakistan, 13%. And the reason for that is that normally what happens is that there is a gap between investment and savings in developing countries. And that is financed through essentially through the balance of payments, through the current account deficit and so on. Pakistan cannot afford a current account deficit because of its very low level of reserves. And about a year ago, we were perilously close to a default situation. And as a result of that, we have to ensure that investment and savings are more or less equal. And that is why the national savings 13, investment 13. This is why Pakistan really, and you know what this means? It means that our long-term growth rate is now going to range between 2.5% to 4% maximum with this level of investment.
So, Dr. Pasha, how is this linked to human security and human development and gender equity? How does this whole thing map over to that side?
The issue is, why has savings collapsed so badly, domestic savings? Over the last 5 years or so, what we have seen is a very high rate of inflation, and which has in fact reached a peak 2 years ago of almost 30%. And the data that we have collected on rise in wages of skilled and unskilled workers, you will be amazed. Every year over the last 5 years, the gap between inflation rate and the rate of increase nominally in wages has increased to almost 6% per annum, which means that over the last 5 years, real wages of our workers have fallen by 30%. And top of that, unemployment rate has gone up from 6 to 10%. And it has gone up from 13 to 25% of women. This is the tragedy. Today, Pakistan faces the worst situation at the household level. Even middle-income families are unable to save anymore. So that is why it is extremely important that we make special efforts to ensure that there is a more gender balance. I have done in my book on human security, I have quantified various indicators of gender inequality. And the curve, interestingly, is an inverted U shape, which means that from 2000 onwards to 2015-16, gender inequality did improve. But from 2015-16 onwards to 2022-23, it has fallen again. And the worst increases that we have seen in inequality is in primary education, labor force participation rate, and unemployment rate, and relative wages. Women are facing even worse of a hurdle and a negative shock than males. And so I look forward to hearing from my co-panelists in this horrible macroeconomic environment, what can we still do at the micro level? And let me tell you the latest number that the World Bank has published, and I'll stop here, on the percentage of women who have access to a formal account. The percentage that the bank has revealed is that on the average, only 1 in 8 women have an account. This is one of the lowest in the world and compares with Bangladesh, where it's almost half the women have access to accounts. And thanks to the new chief advisor of Bangladesh and Grameen Bank. So let me stop here and look forward to hearing what can be done in this extraordinarily difficult environment.
So thank you, Dr. Pasha, for setting the stage and making us see how challenged we are when it comes to financial inclusion at a macro level and how endemically tied the savings rate is to the growth prospects of a country. Moving from there, I'd like to come to Madam Khalda. And my question to you, Madam, is given this overarching economic distress that we are seeing, and there seems to be an inflationary tax on savings in the country over the past 3 or 4 years, what can the regulator do in this environment to promote financial inclusion, specifically from the women's perspective in savings? What is it that the regulator is thinking? What are some of the best practices? Can you tell us a little bit more about the SECP's vision on promoting gender-inclusive financial services in Pakistan?
Thank you, Roshani, and the co-panel members for giving me this opportunity to speak with you today and represent SECP. Let me assure you that SECP is a regulator that is deeply committed to advancing financial inclusion and gender diversity across all areas of our financial ecosystem. We are one of the regulators in the economy. By the other end, we have the State Bank of Pakistan, and we regulate the entire non-bank financial sector and the insurance sector. So generally, the criteria that is selected for assessing the financial inclusion is opening of a bank account. As Dr. Pasha rightly mentioned, that there is still a substantial number of females who are out of the financial sector because they are not even having access to open a bank account. There are various factors that are influencing this reality based on the socioeconomic and their socioeconomic factors, their access, their knowledge, their literacy level, and other factors. We as a regulator, we are targeting to enhance financial literacy, which is focusing not only on the saving component, but also on the investment side. We are encouraging and making awareness among masses regarding what investment avenues that is adding to what is being saved to be kept in an investment mode in various sectors that are available, and to protect them from against the economic shocks in the form of insurance. So we are targeting raising awareness across the various segments to encourage females, particularly the females, to go for the investment avenues in the form of mutual funds or in form of direct investment in securities, because our mandate reflect on this area, and also to making awareness about the protection mechanism available in all these segments, how to protect against economic distress in case they face such scenarios. Our focus, if you reflect on the micro segment, I think there is a very strong statistic that I would like to quote, that around 80% clientele of microfinance institution is the female. So this reflects that these institutions, around 250 million are the individual females who are getting loans from the microfinance institutions. So these institutions are affecting the lives of these females, these 80% females of their total client base. So through various initiatives, we were part of the National Financial Inclusion Strategy that was launched in 2015 with a strong backing of the government of Pakistan. And through that implementation of that strategy, various measures and various policies were implemented by SECP as well as by the State Bank of Pakistan. Going forward, we are looking forward to implement a banking women inclusive finance strategy of SCCP, whereby a target would be to increase the female clientele of the new clientele of the microfinance institutions. Target would be to encourage these institutions to launch specific gender-specific products, not only the financial services, but also the non-financial services to be extended. Plus, I think one of the major area remained that there was hardly any data available with the policymakers to make such policies going forward. So we are requiring through this strategy, this policy that we are soon will be implementing, to gather the data from the microfinance institutions, whereby we'll be in a position to make future policies impacting primarily on the female side of this segment. So I'll be closing here. Because we are doing a lot, I'll be coming as you come up with the next questions. Thank you. We can't hear you, Roshani. You are on mute. Roshani, you are still on mute.
Sorry. Thank you, Madam Khalda. This is very encouraging that you have, that you are not only looking at empowering women through financial education and setting up standards for that, but also looking at gender disaggregated data, because a lot of times financial decisions, we think about gender neutrality when it comes to women and in design of financial inclusion products. And we've in that law of averages, we forget that women have special needs. And that's where I'm going to now head to Dr. Mariam. Dr. Mariam, the fintech space seems to be, an opportunity for doing the last mile, impact gap, or reducing the last mile gap for women in financial inclusion. So my question to you is, what, in your experience, you've worked with technology and women, and we are still way behind when it comes to access to even mobile phones in Pakistan from a gender perspective. So what has your experience been in gender intelligent systems design for financial inclusion? And what are some of the lessons that you can share? And what do you think fintech can do for women, if at all?
Thank you, Roshani. It's such a pleasure to be here. I think that Dr. Pasha said it very, very well when he said that we find ourselves in one of the most difficult and complicated eras where Pakistan is concerned. And this is certainly true for sort of gender equitable access to digital tech as well. Women are always the last ones to have access to resources, and that includes technology. I think there are a few things that are really important to keep in mind when we start thinking about designing digital financial solutions for women. I think one, it's really important to keep in mind that sort of low literacy levels for women in general in Pakistan, and then you couple that with low digital literacy levels, and so that's a recipe for not having women included. So when we think about designing for women, I think it's extremely important. And often when we speak to banks and we speak to fintech organizations, we see this missing link of actually speaking to the women they're designing for. I think they have an idea in their head of what the needs of women are, but they're very often sort of different from ground realities, where often women will have access to a shared phone. But we know that most mobile wallets are a one SIM, one phone sort of a model. But if you're a woman who has her own business, for example, a micro business, a tailoring business, or you have a very small salon at home and you have money to save, you're not going to put it in a mobile wallet that's on a shared phone, or that's on a phone that your husband or your male members have access to. Instead, what you'll do is you'll have like a secret Rosca, right? Women are great at sort of financial interactions that are also coupled with relationships. So they're fantastic at being part of committees, Roscas that we call. And so I think participatory design methodology is actually speaking to women, doing qualitative sort of data gathering, sharing data. This is something that Madam Khalda has also mentioned. Having access to data is vital for financial institutions, particularly for fintechs, to be able to curate and create products that work for women. I'll give you an example. I recently had a very interesting conversation with Farhan, who's heading Easy Pesa. And they realized that women weren't really using their mobile wallet very much for savings. And so they actually were smart enough to go into the field and talk to women. And what they found, and I do this too, and I'm sure, Roshana, that you do this, and maybe Madam Khalda also does this. So in my head, my my daily expenses and my savings are separate. And so I want them in separate accounts. I don't like to see what I'm saving every month in the same account from which I'm spending every day. And so I will have multiple accounts set up. And at the beginning of every month, a certain amount will go to a savings account. This is not typically how mobile wallets work. And so Easy Paisa understood this once it's spoken to women, that they want to have different buckets. And now they've done that. They're one of the few mobile wallet providers that I know they have separate buckets. And those buckets also have different sort of flexible sort of minimum micro savings. So you can put in 100 a month, or you can sort of self-determine how much you put in. And once you put money in a bucket, that bucket's hidden, but then that money is also not part of what's available to you to spend. And I think that's one of the really smart ways of creating value for women. Because, a lot of the conversation around fintech is around literacy. And while that's very important, the more we work with women, particularly with micro-entrepreneur women, what I find is women will figure out the how if they see the value. And very often we don't focus enough on creating the value or marketing or talking about the value. None of the content that's out there, low-income women who have micro-enterprises, they're either listening to the radio or they're watching TV. There is no content on the TV that's actually talking about women who are leveraging digital technologies, financial products, that are leveraging digital spaces like Instagram and Facebook and WhatsApp to run really successful businesses and to save and to invest and to do, we have startups like Udan that are actually giving you access to digital Roscas as well. But none of that content and the value of that is placed in a way that women have access to. So my experience is that, if you go to any low-income household and you talk to any woman, regardless of age, she will know how to use WhatsApp and she will know how to use YouTube to watch her dramas. And nobody has taught her how to do this. This is not something that somebody went and taught her how to do. She just saw intrinsic, inherent value in it and she figured it out. So I think the value component of using sort of digital financial services and using digital tech in general, we don't make that label for women. And then the second big thing I think that we don't focus enough on is designing for privacy, especially in a context like Pakistan where phones are shared, where women, you cannot expect that WhatsApp on one phone will be private to that particular woman, or that a mobile banking app on that phone will be accessible only to that woman. So I'm going to stop here.
So very interesting points, Dr. Mariam, that you've shared. Confidentiality is, of course, something that women really, really want and need, especially from a savings perspective. We've seen that in the research that we've often done, that they don't want their husbands to find out how much they're saving. And then when you link that to technology and access and ownership of phones, it becomes a key driver in the products that you design. But I think what you're also saying is that a lot of these things are intuitive. And if we add the gender design, intelligent design concept to intuition and human behavior, that can be one of the leverage points, along with the fact that anything that we do should solve a problem. So there should be an intrinsic value attached to it. And I think this is really the key fundamentals of designing for women or from a gender lens. But I'm going to move very quickly back to Dr. Pasha. Dr. Pasha, if we look at branchless banking in Pakistan today, there are 117 million accounts, of whom only 50% are active. And the average deposit in these accounts is around, this is latest data that I picked up from the State Bank's website, is about 1,100 rupees, which means that these are really dead accounts. Even if 50% are normatively active, they're essentially dead accounts. If we look at the gender disaggregated data behind this, 69% of these accounts are held by men and 31% are by women. And there's double counting going on when we go to the G2P side of it, which is BISP, which is where I want to go. So there are about 7 million transactions that are done under the aegis of the Benazir Income Support Program. So my question to you is that how can we use this as a platform? If you put on your economist hat, we do have the potential of G2P transfers, creating that intrinsic value that Dr. Mariam was mentioning. How can we use this platform to further the cause of financial inclusion of women from a savings perspective? What can we do more with this? This is a huge opportunity that we can actually co-create or recreate or co-design. So over to you, Dr. Pasha.
A very useful and very good question. And I have been a great follower and supporter of the Benazir Income Support Program. Once in a while, Pakistan does something which is good and very useful, and this is one of them. And the good thing about this, it's scientifically designed. The targeting has been done through very careful marketing at the household level and determining the eligibility. And today the position is that almost 550 billion rupees are being allocated through the Benazir Income Support Program and its associated other programs. Now the question is that how much access is this providing? The good thing about this program, why I particularly like it, is that the receipt of the support money is women, which is excellent. And this gives them certain economic power and rights at the household level. And today the position is that we have over 9 million such women receiving quarterly cash transfers of about 10,500 rupees. The issue is it's still very limited coverage. It has improved a lot, but today the incidence of poverty, according to our careful estimates, is at an all-time high at close to 44% of the population, which means that close to 16 million households are poor today. And the number of poor people is well above 110 million. Out of the population of 240 million, it's going up and up. The last 3-4 years, it has increased very substantially. So the point is that the question that was sent to me was, what should we do in the context of the IMF program? Now, one of the risks that I am seeing now with the IMF program is that an attempt is being made gradually to transfer the social protection work and funding to the provincial governments. This is a fundamental mistake. Poverty has to be tackled at the national level, and the access to social protection has to be the same at every location of the country. The risk is that if you decentralize it down to the provincial level, you will create a situation where there will be differential treatment among the provinces, and this would be completely and totally unacceptable and wrong. So we want to have Benazir Income Support Program remain at the federal level. Today, you'll be amazed the poverty gap, which is the difference between the poverty line and the actual income of the poor of the Pakistan's population. You will be amazed. The poverty gap is 2,250 billion. And despite its very good design and so on, Benazir Income Support Program caters only for 20% or so of the needs. So what we need today in Pakistan is much more broad basing of taxation for the so-called elite, including agriculture, the property, and of course, large traders. And that our estimate is that if we can tap these big privileged groups, we can raise an additional 1,500 to 2,000 billion rupees. And a large part of that should go towards poverty, because poverty is at an all-time high also in our country, and we need to focus on that, and that way particularly access women. And once you have this system of sending money to them, automatically it creates an incentive for banking and opening accounts and retaining them.
Thank you, Dr. Pasha. So definitely, I think poverty needs to be tackled at the national level. That is correct. And I think the foot in the door we get from BISP in terms of women opening their accounts and at least doing the transaction makes me want to ask Mariam this question, Dr. Mariam this question. If you were to redesign, so you have these 9 million women who have bank accounts already. What would you do from a gender?
Roshana, you're muted.
Sorry, I'll ask the same question to Madam Khalda as well. So if we have this opportunity of 9 million women having mobile accounts through the Benazir Income Support Program. If you were to move them away from this transactional account to a savings account, what would you need to do, Mariam? What would you do, Dr. Mariam, in this context?
So speaking from a tech perspective, I think just completely redesign their access, right? Forget that they're able to leave the house and physically walk to a bank. Assume that they have access to it through a smartphone. First of all, I think give them access to a smartphone. Second of all, allow them, create it in a way where they can hide. Yeah, right. There are ways for them to sort of hide money in buckets that are only accessible to them through sort of some kind of privacy password protection. Secondly, make it speech-based, right? Make it really so that on their phone, they can pick up the phone in Urdu, in the local language, say, I need to do X, Y, Z transaction, and have their mobile app come back and say, here are the steps you need to follow to do X, Y, Z. I'd also build in a financial assistant that can hold their hand and say, okay, so if here are the goals. What are your goals, right? So a speech-based conversational assistant that can ask, what are your goals for what you want to do? And if the woman says, I want my son to go to university, then kind of handhold through, here are the savings mechanisms available to you. Here are the ways in which you can, here's the minimum amount that you would need to put in. Here's how much you would need to put in every month. And that's how you would get to a goal. So we find that having sort of very specific targeted goal-based mechanisms sort of appeal to women, especially if those goals are self-determined by women. That's one thing I do. The other thing I think that I'd really focus on is helping women, if they are really thinking about micro enterprises, setting up their own businesses, helping them expand those in the digital space. Too often we've spoken to women who've said that, my business is doing well, I want to expand, but I'm looking for a house on the main road to move to. They're not able to make that connection between, I have a micro enterprise, I can expand this online without requiring brick and mortar, right? The other thing I do, and I think that maybe Madam Khalda can speak to this a little bit more, I think certain things need to change from a policy perspective, just like the BIS program. Imagine having something like that allows women only access to cheaper smartphones and cheaper mobile data packages. So that kind of lowers the barrier to them having just access to the tech and the infrastructure they need to do all of these other things, right? The other stuff I think comes a little bit later, but if there was a way to subsidize their access to tech, subsidize their access to mobile data, that would go a long way to just them starting to use it.
So one of the problems, Dr. Mariam, is the high transactional costs and lack of affordability when it comes to using the agent network. And, even if you have women, as you said, have small amounts of savings, and this continues to be a major barrier for women to put the money into the account and then withdraw it because they have to pay huge transactional costs on it. And the return they would get on that saving would be minimal when you net the cost off. So how can we work on this? Maybe I should ask this to Madam Khalda as well. What does the regulator see? Because when we're talking about even the small deposits, and I want to acknowledge here the fact that SECP has had an amazing sandboxing approach. And maybe, Madam Khalda, you can also talk about that, the experimentation that you are trying to promote in the sector, in the non-banking microfinance company sector and the non-banking financial sector per se, using sandboxing. What are some of the results that have come out? And how can we make financial services, especially from a small micro savings perspective, affordable for women? Because that's one of the key barriers here.
Thank you, Rashani. And I was particularly interested in highlighting the sandbox initiative that SECP has already implemented. Because under the sandbox environment, we allow the fintech companies to test their new products, innovative products, on a pilot basis, with a limited scale. We have, I think, successful experience of running a P2P lending platform in the sandbox, which graduated and enable us to structure a complete regulatory framework for the P2P platform. And we have certain success stories that in entities, they implemented these P2P lending platforms. I think the models that we tested under the sandbox were the digital distribution of mutual funds. If you highlight that in the country, we have 9 million plus female consumers or the users of the BIS program. But this is basically they are using this money for the consumption needs. What is the FCCP's long-term policy or the mission is to transform these consumer individuals, females, into gradually a savers one, so that they are in a position to save some component of the money that they are getting under the BIS program and gradually move into a saving regime. For that, we have enabled digital onboarding, whereby individuals can be using the industry apps and onboard with the minimum requirements of documentation. The issue that I think we are facing is that females have very low in getting their ID cards, having the mobile phones, access to internet, because these are the infrastructure issues that I think we need to address while coordinating with various other stakeholders. Like for the cost of NADRA verification, which is substantial, we are collaborating with the NADRA to reduce the cost for the micro savers to allow these facilities, because this verification is important from the perspective of our compliance with the FATF requirement. But we are targeting or collaborating with NADRA to give these facilities on a very low cost. For example, if for a normal KYC verification, it's 45 rupees. For the micro component with less information to be retrieved from the NADRA system, it will be just rupees 10. So we are talking also with the State Bank when we are working on the policy that all the disbursements and the receipts of micro loans should be through the digital modes. But then we are talking with the PTA and the State Bank to reduce the cost of these transactions because there are various factors. I think this can't be done by one regulator in isolation, but collaboration and aligning the interest of all these regulators is important, so that the ultimate goal should be the financial inclusion and saving regime development for the female gender-based clientele of the country. We have allowed the onboarding through digital modes, and our Sandbox has a successful example that digital distribution, digital advisors are also allowed by us. And we have worked on the digital asset management companies, digital insurers, digital brokers. So entire ecosystem is converting into a digital mode. I think we can't live without the adoption of technology. So we are also encouraging the non-bank segment to partner with these fintech institutions to enable the digital availability and access to digital means to the masses. So the encouragement is for the industry to collaborate with the fintech startups and offer such products that are accessible to the larger masses.
Thank you, Madam Falda. That was a very interesting intervention. So I'd like to thank all our panelists for a wonderful and very highly interactive discussion. I'll just quickly wrap up with some key headlines. I think it goes without saying financial literacy and digital IDs for women really matter when we are wanting to further the cause of financial inclusion, then gender desegregated data and how we slice and dice that to determine segmentation, and then to put in gender intelligent systems and design. I think, as Dr. Pasha mentioned, the role of women in the economy is critical for poverty alleviation, and we need to look at ways and means to bring that change. More innovation is also critical, as Dr. Mariam mentioned, and as we learned from Khalda Madam as well, regarding the role that the regulator is playing. Affordability is another very important area that needs to be looked at. So Dr. Mariam talked about subsidies that could be offered for tech, and Madam Khalda mentioned the fact that we need to have more collaborations on this. And also realizing, as Dr. Pasha was saying, that women's realities are very different. When we look at human security, when we look at human development, these are very different for women, and financial inclusion must try to alleviate those barriers and create opportunities for women. So thank you again for a very, very exciting discussion, and thank you again for your time.
Thank you for having us.
Thank you.
Thank you.